I'm Sam, I'm the Energy, Commodities and Utilities Director at ScottLogic. I also look after our hyperscaler partnerships. I think the energy transition is a really impactful moment. It's really shaping the way that everybody is thinking about the sort of technologies they're using, the products they need to be providing, and volatility in the market is really impacting how trading operates. As an organisation that's worked in the financial services industry, we understand volatile markets and we understand how technology needs to change to adapt to these changing markets. We've got a lot of experience in regulated industries, but particularly within connected trading industries where there's high frequency trading, but also the use of things like algorithmic trading, which is something that hasn't traditionally been used heavily in the energy trading sector, but will increasingly. So we can bring that experience, but also ScottLogic has been working in the energy sector for 12 years now. I was personally involved in work with Nord Pool, which was very impactful to the industry, but also something that was flagship leading in that world, bringing in a user experience design where we really thought about the end user and what products and services they needed, and helping the industry transition forwards to modern technologies and modern ways of working. So we've got great experience as well as having referenceable experience from other industries. We're in an extremely changing market at the moment, whether that be geopolitical uncertainty that's changing everything, or whether that just be the energy transition itself that is fundamentally altering the way that energy flows around this world. We need to have systems that can adapt to that, whether that be systems that monitor our physical devices, whether they're helping us monitor markets to ensure that they're fair, or whether they're helping us trade better. Having good, robust DevOps practices that allow you to move your systems forwards with safety and surety is massively important to being able to answer the energy transition. We come from a truly strong engineering background at ScottLogic, where we focus on hardcore engineering, as we like to think of it. So a lot of what we're doing is not just focusing on the business problem, but also the engineering problem underneath it and bring those two things together. A lot of organisations shy away from really difficult technical problems and trying to solve those, whereas we'll lean into them and want to take those on. Some of the things that you'll find from ScottLogic is a real drive to embrace new technology and bring that into the delivery that we have, but trying to make that sympathetic to the client. So if we're working with a client where perhaps the latest, greatest modern technology isn't going to be something that their people can pick up on and take forwards after we've left, that won't be the right choice. We leave our clients with a legacy that they truly want to have, and it's the technologies that fit them, not that fit us. Another really important thing about our delivery that's different from others, when we're delivering, we're truly holistic. We can look at the whole market. We have partnerships with hyperscalers and with other technology vendors and other consultancies, but we're not influenced by those. We will allow ourselves to pick the right technologies for our client, and our consultants are empowered to do that. Adapting to regulation is very hard. There isn't a competitive advantage to doing it necessarily. It's trying to bring value to what you're doing when you're answering regulation as well as answering the regulation. You can look at it purely from what's the minimum that we can do to answer this. But if you ask yourself the question, why is this regulation being brought in? What can we do to actually adapt our business to take value out of the change that we need to make? That can really help. Some of the work that we did around MiFID II, which was obviously in the financial services sector, was really impactful there because it was helping improve the flows between sales and trading that actually gave them a competitive advantage as an organisation, not just answering the tick boxes that the regulator puts in front of you. We worked with companies like the Royal Bank of Canada where we helped them really modernise their sales trader flow. In the energy sector, we were influential in the implementation of REMIT in the first instance when we were working with Nord Pool, where we introduced their urgent market messaging system that was part of their REMIT approach. Our experience working with REMIT 1 really helped us understand how regulatory change can be a changer for good as well. And that was modernising systems that otherwise would have been left to legacy and would have been a problem in 10 years' time. Agility is one of the really important things about answering regulation. If you can build your systems in an agile way, and I mean agile with a small a, that allows you to adapt to change, then you can answer regulation much more easily. What's really important to that is ensuring that you can automatically check that your systems are doing what you expect them to do. So bringing in modern DevOps practices and making sure that your systems are in such a state where you can make changes to them safely and not have fear that you're going to break things will allow you to adapt to regulation much more quickly. I think cloud has been viable for many years. we're finally getting to the point where it's hard to deny that cloud is viable anymore. You look at the certifications that a cloud provider can bring to the table, whether that be ISO certifications or other security certifications, you can truly get the feeling that they know what they're doing. The important thing to understand is the shared responsibility model that exists within the cloud. So we're not talking about a cost driver here, it's about who should be doing what. Why are you managing your own infrastructure when you can hand that off to somebody else for you? But thinking about legacy estates and how you can bring those to the cloud is really important. It's understanding where the value is in moving to the cloud and finding those areas of your estate that can best leverage the advantages that the cloud gives you, whether that be scalability, whether that be the amount of data, whether that be modern things like AI. If you can identify areas where it's valuable to be able to use that burst capacity in the cloud. Perhaps it's looking at how you could do risk calculations in a more real-time way, or maybe it's looking how you can take your data to the cloud to unlock analytics. If you can find those value drivers, that takes away the legacy problem, because actually your systems are just a source to feed into the cloud rather than being an anchor that stops you moving. When you talk about cloud strategies and cloud migration strategies, the 7 R's come up. It's probably 9 R's by now. Everybody will have a different opinion of what you should be thinking about, but I personally think one of the really important things is to understand what you want to retain in-house at the moment. There will be some systems that you just choose not to move because they're too difficult, or possibly you just feel those are the more risky systems that you want to hold in-house. If you can understand on your system map which things you want to hold, you can then think about where you might retire some systems. Possibly you've got the opportunity to look at some things that are duplicated within your estate and understand perhaps you want to retire some, and then understanding what you want to re-platform or refactor to move into the cloud. Once you've identified those systems that could be refactored and replatformed, understanding what the value driver to doing that is, and really finding those opportunities to use the cloud to its best ability and moving those systems first. You need to be aware, though, in your strategy of migration to the cloud about data gravity. Where data is in your estate is very important, and the amount of ingress and egress that you'll do to the cloud is something that you should consider. So if you're going to move, say, a risk system, but keep all your data in-house, you're probably going to get very large cloud bills that you wouldn't expect. So thinking about that early on, understanding your data gravity, but then really coming up with a map of the systems that's driven by the value and how they can best utilize the cloud technologies. Yes and no. I think it's a really hard question to say, should everybody moving towards the cloud? Every company should be assessing whether the cloud is right for them. It might not always be the right answer. Perhaps you've got a very large vendor agreement in place already that would be hard to exit. You will see people repatriating from the cloud back into their internal estate, because coming back to that shared responsibility model, the cloud shouldn't necessarily be just about cost. But if, for example, you have an operational team that you have to maintain for other reasons, possibly that doesn't make the shared responsibility model as relevant. If you have a very large team, if you're Amazon, are you using the cloud? If you're Microsoft, are you using the cloud, or is it the cloud that you're operating yourself? So there are times where you should think about this. Most of our energy trading clients, though, are around the right sort of size of organisation, where I'd imagine the shared responsibility model is going to be very beneficial for them, and they'll see lots of value unlocked by moving to the cloud. There's definitely a trend within the industry to see cloud and not cloud native as not being valuable, and people say that you have to be moving to cloud native to get the best out of the cloud. There is truth in the fact that using cloud-native technologies will probably give you the best advantage that you could get out of the cloud, but they can be more complex and harder to understand, and they can provide you with vendor lock-in. And these are some things that you might want to avoid. So whilst driving towards cloud-native can provide you an idealized solution, it might not be right for your organization. And that's the really important thing to understand. Not is this going to build somebody's CV, but is this going to be right for your organization? Silos of data are really interesting within organisations because many exist for legacy reasons that probably shouldn't be there. A lot of the time it was protectionism around data, sometimes it was about technical ability to provide access, and sometimes it was about security around the data that was perceived rather than real. To break down some of these silos, you really need to go back to the drawing board and understand who owns that data and why, and who they can share that with safely. The cloud provides you lots of opportunities to take off-the-shelf technologies that will allow you to provide security at the same stage as unlocking data. Data lineage is a good example where cloud technologies can provide data lineage for you that will help you understand where that data's come from and who can use that data. We can build security models around data that allows you to permission people into certain parts but not into others to provide that segregation that's needed to comply with regulation, for example. But the really important bit is to start looking at how you can feed data into the cloud and not lose data. Traditionally, Additionally, a lot of organisations perhaps will have curtailed the data that they have because they won't have the storage for it, or they won't allow themselves to record data as frequently as they would like. Now that we have cloud technologies that are scalable and data technologies, importantly, that are leveled so that you can move it into the right level of accessibility depending on how frequently you're going to want that data, it changes the game into what you should be storing. So store everything and remove things only if it's absolutely necessary. Moving forwards, AI is going to be more and more important. I think it's very important to understand that whilst generative AI at the moment is in the headlines, AI has been prevalent in many systems for a long time in different ways, and AI in itself is going to be the thing that will unlock value. Many clients in the energy industry are talking to us about how we can improve trading using AI, but I think that's just one area, and that's one area where regulation is particularly difficult to deal with and to bring AI in. If we look at things like market surveillance, for example, if you wanted to provide some in-house market surveillance using AI, you could use some of the generative technologies to help you understand very quickly what trades are about. There could be other areas, so still looking into the back office, there are plenty of areas of energy trading organisations where there are very manual processes that rely still, some places, on paper being passed around an organisation. Well, using the generative AI technologies will allow you to unlock that paper process and bring it into the modern age. We've not even touched on developer productivity and trader productivity outside of direct systems. Just providing these technologies on the side of people's normal working days is a really important thing that people should be considering. Can we unlock a trader's potential by them not writing a memo to their boss and instead Gen AI does that for them? Can we unlock the potential of people in our development teams being able to focus on the true value that they can add in their experience and not just on writing code?